Bitcoin. It's the word on everyone's lips, from tech gurus to your grandma who just learned how to send an emoji. This digital currency has taken the world by storm, capturing the imagination of people from all walks of life. But what exactly is this digital phenomenon, and how does it stack up against the good old-fashioned dollar bills in your wallet? Is it just a passing trend, or is it here to stay? In a nutshell, Bitcoin is a cryptocurrency. That's a fancy way of saying it's digital money that exists solely online. Unlike traditional currencies, it doesn't have a physical form. No physical coins, no crisp bills, just lines of code whizzing through the internet. It's a revolutionary concept that challenges our traditional understanding of money. And unlike traditional currencies controlled by governments, Bitcoin operates on a decentralized network. This network is called the blockchain, a public ledger that records all transactions. That means no single entity, whether it's a government or a financial institution, has the power to manipulate it. This decentralization is one of Bitcoin's most appealing features. This decentralized nature is a big deal. It means Bitcoin is immune to the whims of politicians and the inflationary pressures that plague fiat currencies. It's a form of financial freedom that many find attractive. Remember when that loaf of bread cost a nickel? Yeah, Bitcoin fans would argue that wouldn't happen on their watch. They believe Bitcoin can protect against the devaluation of money over time. But this freedom comes at a price. Bitcoin's value is notoriously volatile, swinging wildly like a caffeinated squirrel on a sugar rush. One day it's up, the next it's down. This volatility makes it a high-risk, high-reward game, attracting both thrill-seeking speculators and cautious investors looking to diversify their portfolios. Whether you're a seasoned investor or a curious newcomer, Bitcoin offers a unique opportunity to explore the future of money. Hold on to your hats, folks, because every 4 years, the Bitcoin world goes a little crazy. It's a time of excitement, speculation, and often wild price swings that leave everyone from seasoned investors to casual observers on the edge of their seats. Why? 2 words: Bitcoin halving. This event is one of the most anticipated in the cryptocurrency calendar. This event, baked into Bitcoin's code, cuts the reward for mining new Bitcoin in half. Essentially, miners receive 50% fewer Bitcoins for the same amount of work. Think of it like a digital gold rush where the gold nuggets suddenly become half their size. The scarcity of new Bitcoin entering the market increases. Now you might think this scarcity would make Bitcoin less appealing. After all, who wants to work harder for less reward? But in the topsy-turvy world of crypto, scarcity often breeds desire. The less there is of something, the more people want it. When there's less Bitcoin to go around, its perceived value goes up. Investors start to see it as a more precious commodity. It's like that limited edition Beanie Baby you swore would fund your retirement. The rarer it is, the more valuable it becomes in the eyes of collectors. Historically, Bitcoin halvings have been followed by significant price surges. These events have a track record of driving up Bitcoin's value. In 2012, the price skyrocketed from around $12 to over $1,000. It was a monumental leap that caught everyone's attention. In 2016, it jumped from around $650 to nearly $20,000. Another massive surge that solidified Bitcoin's reputation as a volatile but potentially lucrative investment. And guess what? Another halving is just around the corner, slated for April 2024. The anticipation is already building. Crypto enthusiasts are practically foaming at the mouth, predicting Bitcoin will smash through its previous all-time high and soar to dizzying new heights, potentially exceeding $100,000. The excitement is palpable. Now, whether it actually happens remains to be seen. But one thing's for sure. Bitcoin halvings are events that keep the crypto world on the edge of its seat. They are moments of high drama and intense speculation, making the world of Bitcoin as thrilling as any roller coaster ride. Remember when Bitcoin was the playground of tech geeks and shadowy figures lurking in the dark corners of the internet? It was a time when the concept of digital currency was still in its infancy, and only a select few had the foresight to see its potential. Yeah, those days are long gone. Now everyone from Wall Street titans to your tech-savvy nephew is clamoring for a piece of the Bitcoin pie. The landscape has dramatically shifted, and Bitcoin has become a household name, discussed at dinner tables and corporate boardrooms alike. Big-time financial institutions, once skeptical of this digital upstart, are now opening their doors and their vaults to Bitcoin. These institutions, which once dismissed Bitcoin as a passing fad, are now recognizing its potential to revolutionize the financial world. BlackRock, the world's largest asset manager, recently jumped on the bandwagon, launching a spot Bitcoin ETF. This move is a significant milestone as it represents a major shift in the perception of Bitcoin within the financial industry. That's a fancy way of saying they're making it easier for regular investors to get in on the action. By offering a Bitcoin ETF, BlackRock is providing a more accessible and regulated way for everyday people to invest in Bitcoin without the complexities of managing digital wallets. This institutional adoption is like a stamp of approval from the financial elite, signaling that Bitcoin has finally arrived. It's a clear indication that Bitcoin is no longer just a speculative asset, but a legitimate investment opportunity. And with their deep pockets and market influence, these institutions are injecting a dose of legitimacy and stability into the once volatile world of crypto. Their involvement is helping to stabilize the market, making it more attractive to a broader range of investors. But let's not forget about the little guy. Retail investors, fueled by FOMO, fear of missing out, are also pouring money into Bitcoin, hoping to ride the wave of its meteoric rise. These individual investors are playing a crucial role in driving demand and pushing prices higher. This surge in demand, coupled with Bitcoin's limited supply, is creating a perfect storm for price appreciation. As more people and institutions buy into Bitcoin, its value continues to climb, making it an increasingly attractive investment for both seasoned investors and newcomers alike. The world's a scary place right now. Inflation is soaring, recessions are looming, and your retirement savings are looking about as stable as a Jenga tower built by a toddler. So, where can you turn for financial security in these uncertain times? Some say Bitcoin holds the answer. Bitcoin enthusiasts argue that its decentralized nature makes it the perfect hedge against economic turmoil. Unlike fiat currencies, which are at the mercy of government policies and inflationary pressures, Bitcoin stands strong, its value determined solely by market forces. They draw parallels to gold, that shiny metal that's long been seen as a safe haven asset during times of crisis. Like gold, Bitcoin is scarce, durable, and resistant to government manipulation. In fact, some have even dubbed it digital gold. But skeptics remain unconvinced. They point to Bitcoin's volatility, arguing that its price swings are more akin to a roller coaster ride than a safe and steady investment. They also question its long-term viability, pointing out that it's still a relatively new technology with untested resilience. As we move forward, it's clear that cryptocurrency adoption is on the rise. More and more businesses are beginning to accept digital currencies as a form of payment. This shift is not just limited to tech-savvy companies. Even traditional businesses are starting to embrace this change. It's a fascinating time, really, as we witness the financial landscape evolve. The implications of this trend are profound, potentially reshaping how we think about money and transactions. So, what does this mean for the future? Well, only time will tell, but one thing is certain: cryptocurrencies are here to stay. As Bitcoin and other cryptocurrencies gain traction, governments around the world are exploring their own digital fiat currencies. These state-backed digital currencies aim to combine the benefits of cryptocurrencies like speed and security with the stability and trust of traditional money. The question remains, though, can they truly compete with decentralized digital assets? Ethereum, often dubbed the smart contract powerhouse, has been a significant player in the crypto space. However, it faces stiff competition from newer platforms that promise faster transactions and lower fees. The race is on, and Ethereum is working hard to upgrade its network to stay ahead. Will it maintain its dominance, or will a new contender take the lead? Beyond Bitcoin and Ethereum, the world of altcoins is vast and varied. From promising projects with real-world applications to speculative tokens with little substance, the landscape can be confusing. Investors must tread carefully, doing their research and understanding the risks involved. It's a high-stakes game, with the potential for both significant gains and losses. Bitcoin, the pioneer of cryptocurrencies, has seen its share of ups and downs. As it continues to evolve, the debate rages on. Will Bitcoin remain the dominant force in the crypto world, or will it be overshadowed by newer technologies? Only time will tell. But one thing is certain, Bitcoin has forever changed the way we think about money and finance.